I can't let you go without asking a couple macro perspectives. So again, markets the last year, maybe finish up on this. I got to say, I hearken back to my early days at Bankers Trust. I know you used to do a lot of business with the derivative guys over there, but I joined Bankers Trust in September 93. Then 4 or 5 months later, I was 22 years old on the swap book. All right. So again, I was learning what LIBOR was. I had direct lines down to the Mercantile Exchange, where I trade my Eurodollar futures to hedge out my swaps and to the Treasury desk. And then I think it was February 4th, 94, the Fed raised rates and the whole floor freaked out. And I didn't know what everybody was freaking out about, but we saw then rates have, the biggest increase up until recently, where they went up a couple 100 basis points, as I remember, and freaked the markets out. You've been through things like that and so much more. Yeah. How does that compare to what you've seen the last year when we've seen rates go up 500 basis points, SVB, failure, and then deposits made whole? What are your thoughts on that, Dan?
Yeah, I mean, look, every hiking cycle ends with a blow up somewhere. And 94 was Orange County, and then Mexico in early 95, right? The 2-year went from 3% to 8% in 94.
Wow.
And it was the worst year for bonds since 1929. 94 was. Wow. So, I mean, I really did live that one. I think in some ways we haven't yet. I mean, this is a weird cycle because I think the Fed, they made so many mistakes. And I wouldn't say that was really the case in 93, 94. Greenspan, I think, navigated that pretty geniusly. I think this Fed, again, it's just looking backwards. They should have started probably hiking a little earlier. But they really overdid it. And at the peak CPI reading is when they turned super aggressive. So I've said this a bunch of times. I mean, I've never seen a Fed that was making policy based on the two most lagging indicators we have, which is the unemployment rate and the headline CPI or you'd core. I think they way overdid it. And every quarter this year will have lower growth and lower inflation. But I don't think that's negative for the markets. The liquidity that was unleashed with the failure, of Silicon Valley is, I would say, potential liquidity is just enormous. I mean, they basically said, the 30% that you lost in your bond portfolio, if you want to lend against that, well, that's as if it were 100% collateral. That's fine. So they just injected a few trillion dollars, potentially injected a few $1 trillion into the U.S. banking system just overnight. So I see that liquidity is going into, risk assets and the sort of slower, boring assets, I would even say, that are more cyclical. I think just are slow. All those things that are interest rate dependent in the traditional economy, they will be slow and exert a deflationary force on the overall economy. So I see CPI certainly below 4 at the end of the year. I've been saying for a while, 10 years below 2.5. I think, 2 years will certainly be below 4. It's just a matter of how, below, right? I think even below 3. I know we're 4.20 today or whatever it is. When does the Fed actually relent and cut? It's probably the second half, is my sense. But it's disappointing, really, unfortunate to end on a negative note like this, but I think the composition of the Fed is just wrong. They don't really have any market, and you and our market guys, and so we are biased, but they don't really have any market, market players or more active market participants. It's very hard, as a, academic or whatever it is, to, having not lived some of these market experiences, to have a sense of, what is the right thing to do. We've never had, the leading indicators have never been, I think, is obviously pointed in one direction as we've had over the last sort of 3, 4, 5 months. There's almost no question that the economy and growth will slow. Usually it's harder than that. But I think it sets the table for actually a nice year in stocks. in NASDAQ, a good year for Bitcoin, Ethereum, gold. And the dollar is definitely, I think, an entrenched bear phase. Not in a dollar collapse bear phase, but in a, gradual, healthy sort of bear phase. I could see certainly euro up another 10, 20%. So I think out of their eras, I think we could, still model our way through it. Which is not that's not a happy message, but I think for asset markets, it'll be fine.
So Jim Rickards has just recorded a video that's not available to anyone in the public, and he's going to be talking about how this upcoming recession is going to be fast, it's going to be bloody, it's going to be nasty. But at the same time, he's going to show you how you can position yourself to profit from all of this chaos. Now, we've made this video only available to our viewers. Go to londonreal.tv/Jim. Watch that immediately. I can't say enough good things about Jim Rickards. He understands the global economic system better than any guest I've ever had on London Real. His predictions are almost uncannily true, and you can learn how to profit from his vision, from his expertise, and his understanding of economics. So go to londonreal.tv/Jim or click the link below. It's an excellent, excellent look on what's going to happen in the future and how you can position yourself to profit from that. Jim is one of the best in the business, one of my favorite guests on London Real, and he's very, very good at predicting the future and showing us all to profit from it. So click the link, and I hope you enjoy. I'm looking for partners, collaborators, colleagues who want to join forces with me around the globe and create real value, generational wealth, and financial freedom for everyone else around the world. Get involved in the cryptocurrency markets, get involved in the NFT markets. This is your moment. Life all comes down to a few moments. Don't let this pass. Now it's not too late. Next year's going to be too late. Ultimately, this is about freedom. That's the way I see it. This is about giving power back to the people and enabling billions of people worldwide to use the financial markets to improve their lives and those of their friends and their families and their communities. Honestly, I think it's a violation of human rights not to allow people basic access to financial services. Because right now people are being kept in the dark, they're being robbed of education, and it's a travesty. And so I'm looking for people that want to join me and be a part of this solution. And that all happens inside the DeFi Academy. The gains my students are making are absolutely amazing. Double, triple digit gains in the first month alone. That's amazing. This will change your life. Now is the time to get involved. I'm going to tell you exactly how my students in my academy made money in the last 30 days. I'm talking about real trading results. And let me just whet your appetite a little bit. Let me hit you with some numbers. I'm talking Brendan from New Zealand is up 68.77% on the month. Steve from Europe up 83%. Albert in Singapore up 169.9% on one single trade. I got Susan up 153% on her call options alone, also rocking 139% returns and 442% returns as well on individual trades. These are people that are changing their financial future in the last 30 days, but it's based on trading discipline. I've graduated over 500 students from inside my academy from over 54 countries around the world. It's amazing. When it comes to crypto, DeFi, and blockchain, we love this space. We truly believe it's the future. This is down to our core. It's authentic to what we're doing, and everybody can tell through the camera because you can't make this stuff up. If you're watching me now, wherever you are, I implore you, take 60 seconds right now and join my academy. Apply today. Now you've got a chance. Life all comes down to a few moments. What are you going to do? What's the choice that you're going to make?